Hi, this is Jack from Alpha Charts with a state of the market video. Today is January 23rd, 2021. Before we get started, this video is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security, and I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Also, if you like these videos, please like and subscribe to my YouTube channel. I do really appreciate that, as well as you can find me on Twitter at AlphaCharts365. Okay, so let's start with the SPX, and the uptrend continues, right? Actually, I think I have it on the SPY better. Give me 1 second here. Drop the SPY, and yeah, it's really showing the same thing though. It's just a beautiful uptrend going on here. Closing near all-time highs, and everything looks good. Every time we get a little bit extended, we get a nice little pullback on the index itself. Was at about 3% right there, just under. Got to here, just under 3%. Maybe it pulls back, maybe it touches. Actually, you know what? Let's look at the equal weight first. As you can see, the equal weight spot SPX is exactly the same. It's going up, move sideways, up, sideways, just stair-stepping higher. Everything looks great. This is what I wanted to show you on the Qs, how the 23-day EMA is holding like a champ. It's now touched it 1, 2, 3, 4, 5, 6, 7 times. And as of right now, the uptrend is strong. It's intact, closing near all-time highs. That looks great. Looking at the equal weight Qs, maybe getting a little bit extended. So, if it pulled back, maybe filled the gap a little bit, right? No big deal. Uptrend is strong. Really, really good looking on the QQQ equal weight. IWM, very strong day on Friday, closing at all-time highs, it looks like. And again, just a strong high. I mean, it only touched the 23-day one time since November 4th. That's a really strong uptrend. And now it's just kind of basing up here. It's about 5% extended from the moving average. So looks great. All right, so let's look at some individual sectors that are important. So XLF going to the weekly. This is an important area. You see it has touched it since 2007. This is the fourth touch of this area. And, it kind of backed off from it a little bit, tried to break out, didn't. So now we have to decide, is it going to be like this time? And again, it doesn't have to pull back this far, but do we get a strong pullback here? Or do we get more of a VCP kind of pulls back to the 23-day and then it pulls back, then it kind of makes a shallower pullback each time and eventually has a true breakout. We won't know that till after the fact, but everything is, I think it still looks great. If we start breaking these moving averages in any real way, that would change my mind. But as of right now, nothing to worry about or to see right now on the XLF. Just something to watch. So that's XLF. And looking at the IYG, which is the financial services, you see how it already broke out from, we'll just go back. Here's 0708. It already broke out, kind of got to all-time highs here. Now starting to pull back, going down to a daily chart. You see now it's at the 23-day. So far it's holding up fine in that section, but we'll just watch this. If it breaks this area, then you hit the 65, which is right in the area of possible support. So that's what I'm looking at for the IYG, financial services, XLF. Again, what does it do here? Does it keep rolling over? That'd be a much more bearish scenario. or does it kind of just chill out, bounce around, and then break out? We'll see. SMH, the other one that I like to watch, semiconductors, great move. Came back and touched the 23-day back at the end of December. Now zoomed higher. Let's see if it comes back down and kind of does the same thing. It's okay if it does. No big deal. The uptrend is still very strong in SMH. And so there's no reason to think that it's not going to continue higher at this point. Looking at lumber, we talked about this area being important. It came back, tested it, came down to the 23-day, bounced higher, tested a second time, and now let's see what happens. 23-day is still moving higher. Would love to see, even if it bounces around here a little bit and then breaks out, that would be my bullish scenario for the markets. A rollover here, and that would be more bearish in nature. So another one that's kind of at an inflection point. You have financials, now you have lumber, inflection point. Okay, let's keep going. Let's look at, let's go ahead and look at bond yields because I like those a lot. So here's the bonds. Right, no, that's not it. There we go. All right, so as of right now, it's in a downtrend. There's nothing to see here. We're still making lower highs and kind of lower lows. So expectation is that this was going to roll over. Now, if this spikes up, that would get me more concerned. And again, 1.54-ish would be the level that I'm watching right in here, right? That's right where the 65-day EMA is declining and everything else. And it seems like it's, the last lower high. So that's what I'm looking for. If we see a big spike like this, right, there was your warning right here, way before this. Your warning was a big spike from January 21st to 27th. In a week, it went straight up, right? Came down, then made a higher high right there. That was a warning, right? So we're watching for that. We don't see it right now. I don't see it right now. But this week, if we do see a spike, that would be definitely more concerning. Okay, next up, let's look at the VIX. VIX is nice and low, 23. It's fine. Nothing, no red flags there. Still kind of trending down. Not seeing any kind of big spike ups. So that's good. The next up will be put call ratio. Not overheated yet, which we like. Things are still fine. They can go a little bit more. So things look good there. Value line geometric index holding up near the highs, all-time highs actually. Again, breadth is still good. We're not seeing, if this was a false breakout here, if that's a false breakout and we start going below here, that would definitely get me more cautious. We're not seeing that at this point. Let's look at percent stocks above the 50-day. And again, just chilling out up here. Let's just go to a weekly on this. So it's like just kind of hanging out up here and for a long time actually, which is kind of interesting. Back to a daily. A shakeout back to, maybe the 50 line, maybe not even that far down, maybe, 65, 70. That would be totally normal and good price action right now. Since November, I mean, the market has been crazy strong. And you see gold, which we thought maybe trying to break out or trying to do something, as of right now, has failed, right? It failed right here, came back down. We'll see. Maybe that makes a higher low here and makes the right side of the base, right? And we do get this inverse head and shoulders. But looking at it relative to the SPX, we're literally at the decision point. Either it's going to start to outperform some this week, right? or we're going to get lower than this area here, and this pattern for me would be bust. And we would just kind of follow it going forward if it started to look constructive again. So that's gold and gold relative to SPX on this chart. So in the end, again, state of the market is probably the most important thing I do all week because it kind of sets the tone for the week. And what I see is maybe an extended market, right? That's a pretty big move right there. Maybe an extended market. Maybe some places at inflection points that maybe need some time to resolve, maybe some chopping around. I wouldn't be shocked with a 5% pullback. I think that it just sets up for great entries in great names because we are in a bull market. And the more likely scenario as of today, January 23rd, in my opinion, is strong bull market. It's going higher. Again, any pullback I think would be a buyable pullback, and things look great out there. So again, appreciate you guys watching. Leave me some comments below. I do like them and I respond to all of them. So I hope you guys have a great day today. Take care.